Think about real estate, we think about long-term wealth. Those who are the wealthiest made millions and millions of dollars off of real estate. And yes, that's very, very true. Real estate has historically been a great generator of long-term wealth for those individuals who learn how to invest and invest well. But what people don't tell you is that there's always market cycles, always business cycles that run every 6 to 8 years on average, and sometimes they're extended even a little bit longer, as we have had since the great financial crisis some 14 years ago. We've had a bull run market for the last 14 some years, and that market is running out of steam, as they all eventually do. So here's the problem. We only remember what we remember in recent years. In recent years, we've seen financial markets, we've seen tech stocks, we've seen crypto, we've seen real estate. Really, all tangible assets have gone up in value. It's been a huge bubble and created mostly by federal manipulation of the monetary system and fiscal spending. Off the charts. The national debt is, well, the greatest it's ever been, $35 trillion. These are the earmarks of troubled waters ahead. Now, I am not here to be the doomsdayer, the pessimist, to say, oh, the sky is falling. There's always opportunities that come up whenever there's chaos in the markets. I wish it didn't have to be that way. I wish we'd have stability and everybody could just set course and do their work and be good, prudent investors and everything would turn out fine. But that's not the way of the world. We have to understand that today there are so many dynamics that are changing the course of what we thought was true to be some years ago, even the last number of decades. I believe the decades ahead are going to be very much different than what we've seen. A lot more volatility, much more difficult to predict. And this is where it comes down to affect you. I don't know where you invest your capital today. I don't know what your exit plans from your business or your practice may be. I don't know where you're going to put that capital to sustain your lifestyle for the next decades ahead while you remove yourself from active income. Yeah, you deserve to do that. You worked hard to get there. But what do you do with that capital base? Do you put it back in the markets and hope it just keeps going up and up and up? Even unsophisticated people would say, well, that's probably not a good way to go. Where do you put it? You put it in treasuries today, pretty risk-free, 5.5%. It's not bad, but how does that measure up against inflation, which you've got to really look hard at what the inflation figures are that the government gives you because they're not accurate. You have to at least double what they're giving you. I think inflation's running at least 7, 8, 9, 10% today. So if you're not staying above that line, and particularly after taxes, then where are you going to be? You're going to be depleting your capital base, and that's usually not the best way to go in life. I believe in having a tangible asset. Now, your business has been that for you for many years, but you had to work in it. What about other tangible investment assets? Well, I think, again, that's where real estate's the best. But you can't invest the same way we've been doing for the last 12, 14 years with the up market we've had. You've got to be able to change and pivot. If you stay that game where everybody else has been telling you, well, get into the syndications. It's hot. You've got to get in now. Don't miss out on this one. You're late to the party. These syndicators are late to the party. They're just taking money in because they make a lot of fees off of your investment money. Be very, very careful. That's the dark side of real estate. What you don't know will come back and hurt you. Now, there are ways to invest in real estate without playing that card, that game that everybody else plays. You just don't know what it is. You haven't been there, haven't done it. I've gone through 5 major cycles since I started investing in real estate way back in 1980. Yeah, that's over 44 years ago. That's where I got my start. I've ridden through those cycles. I understand what it means to be both an active and a passive investor. I've had the privilege to help hundreds of other doctors, dentists, and their spouses with their freedom plan to help them take their assets, what they have today, currently, and any assets they might sell, like their practice, and deploy those into tangible assets at the right place, right time, the right asset class, in the right place in the capital stack. That may not make a lot of sense to you right now, but that's the key. You can learn this. This is not something you have to abdicate to a third party and just hope that they understand what they're doing. Because most of the financial advisors, planners, money managers out there today have not gone through a full cycle. Many came out of the woodwork back after 2008. They've only seen an up market. What are they going to do to help you with the down market? Can they help you preserve your capital but still get you to have the lifestyle that you wanted to have all your life? This is a place where you've got to be your own financial advocate. I implore you to learn how to not only make money, which you know how to do, but how to preserve, maintain, and get your money working for you. That's the other side of the coin that most of you have not taken. It's your chance. You can do it. I'm here to help if you want the help. Just let me know.